Hey guys, welcome back to the Matt to Million channel, and in today's clip I'm going to be providing the latest update on my small account challenge. So I'll be running through the MYFXbook stats to show what sort of returns I've been getting, and then later on in the video I'm going to switch and pick one of the trades in this period and then I'll run through that as a form of a trade breakdown. For those of you that haven't actually seen any of the previous videos in this series, I'll link up the first video here, which is where I sort of explain why I'm actually doing it in the first place and what the parameters are and what I'm planning on doing. I'll also link up the second video, which was the last one, which was the latest update on this actual challenge. But for those that just want a quick insight, essentially I'd given some advice a few videos back when I was saying, when are you ready to take sort of a funded account challenge? And what I had said was, so many people seem adverse to being on live accounts or have never traded a live account, and yet they keep paying for challenges and then keep failing and then therefore losing money. All my point was, why don't you take that money that you would have put into a challenge, that you then put that into a live account, and then prove to yourself that you can make that 10% in a month or 8% in a month, and you stick within the parameters that you need to prove to yourself that you can pass the challenge. But in turn, this also means that you're actually making money in the process. So what my point was maybe try to look to make 20%, 50% or 100% or whatever, just so as you can make a contribution towards them paying for the challenge. So not only do you technically get the challenge at a discounted rate and you use less of your initial capital that you would have put into the challenge, but also your money goes a lot further and you can learn a lot more lessons when you've got access to 100% of your money rather than just having the 10% drawdown limit that you have on the challenge. Anyway, cut long story short, I decided to go with a live account of £145 after looking around all of the different possible challenges, and I looked at the lower end because I wanted to do it with a small amount, because I know that it's all well and good to say to people, well, put a £600 100k challenge fee in an account and then work it live, because that'd be far easier potentially than doing it with a very small account for somebody that was going to pay for maybe a $10,000 account challenge from FTMO. So I've gone with £145. I did have a bit of trouble trying to find a broker because, as most people know now, I basically just trade indices, and mainly just 3 indices at that. So the leverage thing was a big thing for me to be able to get the small account at that size to be able to trade indices without sort of having margin issues and so on and so forth. I did find a broker. I've left the link in the comment section below, and I've also detailed the exact account that I opened with them, just if you are interested in it. Cool, so shameless self-promotion time. Guys, if you are enjoying the content, it means a massive deal to me if you do hit that likes up button, hit subscribe if you haven't already, and make sure that you've got the alerts turned on so you don't miss when I post my next video. If you've got any suggestions in terms of what videos you'd like to see next, feel free to bung those in the comment section too. Okay, great stuff, so let's get cracking straight away. I've got my phone here ready with MYFXbook logged in, so what I'm going to aim to do is shuffle across a bit, and I'm going to try and plonk it here so as you can see what I see, and then I'm going to try and explain through some stats. So let's see where we're at, and as we can see that we're at just over 30% in terms of gains at the moment, which is, you know, really, really good. So 30.11%. We see that the drawdown, the sort of max drawdown that I'd taken on the account is exactly the same as what it was in the last update at 1.83%. So now my actual balance itself is sitting at £188.65 from £145 starting balance. Moving across to the growth chart, obviously this doesn't really make a great deal of difference, but it's just there to show you, and you can see the continuation in terms of, you know, where it went in terms of from the last session. As you can see here, it's you know, an almost perfect upward trajectory, which doesn't always happen, but I'll take it nonetheless. So we're on 30% there, as you can see. And then on the next screen, it's just more a case of, you know, you can see the today, this week, this month, this year. You know, I'm not a massive, you know, it doesn't really make a difference to me. It's obviously handy if you're tracking in terms of what your performance is. But for those that have followed me, I don't set weekly targets, or I don't really worry about what's been earned in a week or a month or whatever. I just tend to look at the trades and see what I can take. And then the normal trades there. So I've taken 15 trades overall, and obviously a decent profitability there. Average win at £4.41, average loss at £1.20, and 75% of my longs have been won, which is pretty good and pretty consistent in terms of how I trade. And I did take an extra couple of shorts from the last update because there was only one last time, and then I lost one of the 3. So actually the shorts that have won is now 66%, which is more in keeping because I tend to be not as good at shorts as I am. When I say not as good, I'm actually not great at all at shorts. I only take ones that I feel that are completely obvious. But anyway, this is being reflected here. Best trade you can see, £10.14. Worst trade at £2.84. So a nice sort of big gap there, which is what we like to see. And moving on to the next screen as well, obviously we can just see, you know, things like the average hold time. The average hold time is quite prudent here, purely because the last time it was at around, I think, 7.5 hours or something like that. This time obviously you can see it's at 15, and that was due to me holding one for a long period of time. and you know, these things can really sway the balance, especially as this is a new challenge and a new account. Obviously, you know, any figure that goes quite a bit higher than the normal and quite a bit lower, it will really drag or push the average up. But I think it's important for people to see like how long the average hold is, because you know, often people just see, you know, getting in the trade or getting out the trade or profit or loss that's being made, but actually it's the time in between that really defines the trade, and you know, that's the hard part psychologically. And then, as we can see there with the profit factor at 10.1, you know, that's cool. You know, it's a decent stat that you know, that I'm pretty happy with. And then obviously just moving on, just got the monthly analytics slide that just shows the bar graph, just completing the picture basically. So June current is I'm recording this, I'm sat at 30.11%. Okay, cool. So as I said, what I'm going to do is I'm going to pick one of these trades, I'm going to whip across to the screen, and I'm going to talk you through a trade breakdown in terms of one of those trades that I've taken, and hopefully you can get something from that. Okay, so here we are on this trade, which is on the S&P 500 or the US 500, whatever you crazy cats want to call it. But basically, as we're looking at this, I should point out with this that this is a bit of a different trade for me, because those may or may not know that I also am quite an avid investor. You know, like I look at the longer term investments and have a portfolio and all this sort of stuff as well. And there's obviously a lot of crossover with the S&P 500 purely because that is actually seen as an investment tool. And with this means that I don't really day trade it, because I don't like it, because it's not very rangy, it's very slow, very small moving, very gradual, and therefore if you're going to go on the American indices, that's why I'd always you know, look at the Dow and all these kind of things. So for me, there's a bit more at stake when I'm looking at this position, but I'm not going to go right into the nuts and bolts of it, because I want to do more videos maybe surrounding the investment side of things and whatnot, you know, to give people more of an insight into what I'm looking at. But even if I come back out, look, and we look at the daily chart, and we track back over history, for example, and you see this, pretty much every time, you know, we get a run, you know, of action, we get the retracement or the market crash, you know, whenever that may be, whether it's 2008, whether this is the COVID crash, for example. You can see that from the COVID crash, we recovered incredibly quickly in comparison to most of the other crashes. You know, like for example, when this one was where we had a massive dip in 2018, you know, it took, you know, the best part of a year to get back there, and you think that proportionately was nowhere close to this drop. But it doesn't take a rocket scientist to see just how much momentum we've got going up there, where we are, in my opinion, due at least sort of a 10% retracement. So I do think we are going to have a market crash at some point in the next 4 to 6 months. The rationale behind this trade was maybe a little bit stemmed around that and trying to take a look, but there was a lot of other things that were coming into play to do with the S&P, and you know, so for me, I was looking at this being, you know, an all-time high, which is quite common with all of these US indices at the moment. And what you often find with the all-time highs, especially with the S&P, is that, you know, it'll get to the high and then it'll sort of, you know, so here it'll come back up, maybe break higher and then come lower, and that's quite a conventional trait within it. But as you can see, like, you know, I've got this broad high, and I'm looking in sort of in terms of like where it's ranged to this point, and I'll be looking to take a short somewhere in and around this region. Now, you know, to give you a bit of perspective in terms of what I'm talking about, like for example, this here was a previous high, right? You know, like you know, so let's say we drew this line in at this point, and let's just come down to the 4 hourly, just so as it makes a bit more, a bit easier to draw the correct levels. But you see, this was an all-time high at that point. It did channel within here. But the reality was that when it did come back up to test this, it popped back up and then shut back down. And if we actually take a look in terms of like, okay, well, if we were to plot the line sort of on there, and then look to where it got to, we're talking about 17, you know, between 15 to 17 points above, and then the very highest point was sort of up to about 23. So between sort of 17 and 23. So if I'm, you know, if I'm taking a look at, you know, sort of the middle ground of where this is, and I were to translate, I'm not saying do this on every single chart. I'm not saying that, you know, a lot of people are going to be like, what are you doing? This is, yeah, but the reality is that this is just giving me an indicator. Obviously, I already know what my bias of the position will be. The fact is that I know that I need, you know, when it's at all-time highs, it's very, very difficult to sort of take a look at what, you know, you are, you know, where do you get the entry, because there's nothing really to base it off, because it's never been there. So for me, you know, if I took a look at it sort of in and around this level, and I was looking to take, you know, some sort of trade in and around this point. So like if I were to plot that in, for example, I'm looking for it, you know, in and around that level to be triggered. Now, for me, what I'm looking at is taking a look, like with this, you know, see what the price action does. Hopefully it'll pop up, just tag me in, and then we'll come down to the bottom of the channel. That's what I'm looking for. So if we see how the trade plays here. So the interesting thing here is that obviously we can see there's a level being created here. And now for me, this is also one reason why I don't, let me just try and do that a bit cleaner. It's also one reason why I don't like day trading the S&P is because it is an investment tool. It's kind of, shorting it is the only time that's smart is when you're in a market crash. There is no other smart time to short the S&P really, because the ranges are so small that, you're really going against pretty much, the globe at certain points. So for me, when I'm taking a look at this, this level is quite prominent, because we could easily get a reaction off of this level and then only comes down to here and then springboards and then creates new highs and so on and so forth, right? So for me, I'm definitely keeping an eye on this, as a point of reference. Now you can see that we've got a rejection off of this level. So at this point I was thinking, damn, because usually it pops above, but I know that usually what happens is that maybe some people get caught on that and then they get sort of triggered, and then it ends up still doing what it was going to do anyway. You can see here it's just hovering, not really doing a great deal, and then eventually it sort of starts transpiring up a little bit, and then we get triggered into the trade, right? Now this looks, obviously if you were on a very small time frame, even 1 hour, or especially 15 minutes, you'd probably be forgiven for thinking, okay, well it's broken, this is recessing, this and this off. But the S&P doesn't really move in that way particularly. Like, it's a lot more constructive in the way that it moves. There's a lot more balance between buyers and sellers in terms of the way that it moves up, and it's quite gradual. So I'd be very surprised if you just saw it absolutely bolt up, in that example anyway, especially when we're at all-time highs. So still in keeping with what I was looking at. Hovers around here for a while. There's no real cause for concern. Of course, the other thing here is some people always make a point of stops. 12.7 stop isn't particularly small for the S&P. I wouldn't say, like you don't have to go that much smaller, but I mean that relatively, if you think about the price, numerically, it's far less than the FTSE in terms of when you're day trading it. So actually, the movements therefore are usually a lot less as well, right? So that's why, if this was on the Dow, you would take exactly the same setup, but the stops may be at like maybe 25 or 50 or 60 points, and it's all relative to the price of the instrument and also the volatility. But as we get through here, obviously what I'm looking for is to see what happens when we get down to this point. Now this is still hovering around here, and a lot of people will still be favouring to go long, and obviously like you've got to remember is that there is a long bias with this instrument in general, and there's a lot more people that are trading in it, not just day traders. And as we shoot down here, you could argue there's a mini level there, so that's not surprising, but I'm still sort of interested. See, now here we got the rejection wick, and so this is where actually, if you see on the trade itself and how much it took from it, like I ended up sort of being a coward basically, and I cashed it sort of just beneath this line. So basically, often what you find is if you're in the direction that you're heading, that the wick tends to get fulfilled. So I basically set the TP and I'd revised it and gone, do you know what? Because what could happen here is that this comes down, it's reacting to this level again, but because it's more of a bullish instrument anyway, and because it's sort of powering its way up from this drop, it could quite easily just bounce this and then start doing something more constructive and keep going that way. So that was the thing that I was really keeping an eye out for. So that's why I revised the stop loss, and then as we see, I ended up getting taken out, and then therefore I was happy with the trade. For those that are interested, obviously the initial target was down towards the bottom of this channel. Had I held it, I did actually hold it on a different account, but not on this one. So I'm being honest on this one. It did end up going to take profit, right? But the reality is that there was on such a small account and with such fine margins, this was a good profit and a good risk reward, and it made sense to capitalize on that, and that's what I did. So there's the breakdown for the S&P 500 trade, and I'm going to hand back to myself to wrap up the video. Okay guys, there you have it. I hope you've got something from that trade breakdown, and you've also enjoyed the update in terms of where I'm at. It's starting to get into a bit of a cool place for me right now, in the sense that I'm getting close to that 50% target that I set for myself, but I'm also getting a little bit nervous in the sense that it's gone quite well up until this point. I'm a little bit concerned that I'll probably take some chunks out of the account on the way, but as I said in the last video and the video before that, I will still vlog it, whether I blow the account, whether I take big chunks out of it, any mistakes that I make, it will be here, and I will put it, because at the end of the day, I'm trying to put my money where my mouth is and putting myself in the shoes of people that I'm trying to actually give this advice to. But I'm going to wrap this one up here. If you have enjoyed it, please smash that likes up button, subscribe if you haven't already, and also head across to my Instagram if you have any questions that you want to fire to me on a DM. But I try to paste on there on a daily basis in terms of live trade updates, analysis, also run a weekly Q&A as well. So if you are interested in all that sort of stuff, head over there. If not, have a great week, and I'll catch you on the next video. Take it easy.